Khemani, who's with us, founder, Carnelian Asset Management and Advisors. Vikas, good afternoon. Coming to you a little late today. Thank you for joining us. Let's just talk about a few names, and we can let's do this upside down. Let's talk about a few ideas, names, what you've added, and then we'll get a broader view from you in terms of where you think markets per se are headed. Vikas, I see you have Aditya Birla Capital as one of your top holdings in the compounder strategy PMS. Vikas, it's done phenomenally well. I think what 60% this year. Was it a recent addition for you, Vikas?
And good to chat with you. I think this we bought at 100 rupees when about 2 years ago. I think when that's part of when the new management came. I think 2.5 years ago. When I think there was no institutional holding in that, we were the first institutional buyer in that, and our whole hypothesis was the company will be put on a growth path, and the historical concerns will go away and will get re-rated. So we have seen from 1-time book to 2.5-time book happening, and I think still it's undergoing a very good transformation journey. Vishakha has done a great job in terms of putting the growth engine, there. So that was our hypothesis. Thankfully, hypothesis has played out over last 1 year, 2 year, and also in last 6-8 months specifically, and that's what I think has worked for it.
Yeah, and the other one, of course, is a name we've talked about earlier. I mean, the number one and number two stocks in this strategy doing very, very well. Loris, and it's a name that we've debated, discussed. 50% this year, Vikas. So finally starting to fire.
Yes, I think again the way Prashant we look at is as long as the management quality is very good and the capability and competence of the company is very good. Of course, there was a rough patch last year where most investors sold stocks and stock fell from 700 rupees to almost 300 rupees. And of course, there was a rough patch in between. Numbers didn't come and markets were disappointed. But they were, in our opinion, that time cyclical and not structural. And the capability of the company, how company has transformed from an API to CDMO company and continues to transform historically. And so we saw that, and as the visibility of the numbers has come about, as the whole CDMO story is beginning to play out, I think markets has taken a note and stock has done well. So it is a part of a natural. So we think that's still long way to go. CDMO continues to remain a very large structural growth opportunity, and Lotus, and being one of the very few credible players in that space from a capability standpoint of view and customer standpoint of view. So that's the reason.
Right. So those are two done. One more coming your way, and this is, I think, it's an interesting one, right? Kalpataru Projects. It's a name we're all familiar with here in Mumbai in terms of their projects, etc. And stocks available around the price where it came to the market at 395 or so. So I think opened at about 414, 415 when it listed a month, I think, 2 months back. What's the thesis here, Vikas?
Probably you're missing something. Kalpataru Projects is not the real estate company. This is the EPC company.
Oh, this is the EPC one. I beg your pardon.
Yeah. This is.
Okay. What I'm doing is I'm referring to the real estate stock and referring to Kalpataru Projects.
Yes.
Because I pulled up Kalpataru Projects, the listed entity, and okay. So you don't own that. Although I've heard, So okay. I connected 2 and 2. Okay. This is Kalpataru Projects. That's fine. I got that. What else? Anything else new you've picked up, Vikas?
Again, it's public knowledge. It's released in our sort of fact sheet last month. We've added a significant portion stock in Biocon. And I think again, I know there's a lot of skepticism in the marketplace there right now. We think there's a good transformation happening. In this company, demand is picking up. Reasonably good growth happened. A lot of repair on the fundamentals has happened. So we find quite promising prospects there.
Biocon, yeah, that's, I think, in your Amritkal fund, one of the key holdings over there. Actually, if I look at this particular fund, Vikas, hi, good afternoon, Surabhi here. And we know this, I mean, your preference for manufacturing is very well documented, very well known. And that's the lion's share of the portfolio. As a contrast, consumption, pure consumption is only 2%. Now, in this fund, I think you also have a stock like Maruti, but probably again, a play on manufacturing. With everything that's happening now, GST, income tax cuts, monsoon, this whole market narrative that consumption is finally set for a lift-off. I mean, are you convinced about it at all from a more medium-term structural sense? Are you looking to make any tweaks there? Your thoughts? Or do you think that this is going to be a passing trend at best in the market?
So we were never negative on consumption. I think we were negative on consumer segments, valuations, and certain pockets which were overrated and hyped, likes of paints and consumer discretionary and all those things. I think you pay 50, 60 times or maybe more fee, but growth was kind of single digit or less than single, a very small growth out there, right? So according to us, Maruti is also a consumer play because it's a consumer discretion. There's no difference between a car and an air conditioner they are also a consumer discretionary basket. So in that sense, while market tags it as automobile, but I think it's also a consumer basket. So according to us, consumer consumption will do well, but you have to find companies which will benefit from that trend. And we've been positive on automobile as a segment. We felt that was a better play than playing through an air conditioner or any other, consumer durable as they talk about, because the matrices of the both industries are same. Both are, linked to the rising in the per capita income, linked to the interest rate sensitivity, and the industry structure is also pretty much same. But one gets 60p, another gets 25p, and still at 25p it is considered expensive. So we don't believe that. Hence, I would put Maruti and automobile companies as part of a consumption basket than maybe a manufacturing basket.
No, got that. But you're not looking at the lower ticket item consumption. Apparel, footwear, QSR. You're not looking at that whole basket.
We do look at all of them, and like I said, it is at the end of it, just because QSR is a great segment does not mean that it's a good investable risk reward in your favor. We have never found in the last 4 or 5 years any meaningful where we could get our arms around in terms of getting good risk reward. Of course, there are a few names where we bet it and we benefited, but and we have increased also some of the consumer discretion. We are watching everything else, and for me, even in aviation is as good as consumer discretionary, right? It does not have to be necessarily the old conventional basket because we must not forget that consumer patterns are shifting. How all of us are consuming are shifting. So we don't have to necessarily bucket consumption in the original conventional basket or the way it was kind of defined. To my mind, aviation is as good as consumer basket than anything else. So like this, one has to see that we have a decent exposure in our portfolio in consumer, but yes, it is more dependent on the idea than anything else.
Vikas, afternoon. Aditya Infotech, that's your top holding in the manufacturing Amrit Kaal fund, 7.1%. Now, it's a recent listing. The issue price was 675. You were anchor investors, and the stock is double now at 1450. Do you see more upside? Because valuations are also now, you've made a quick 100%, in a span of 1 month. So at this juncture, how is Aditya Infotech looking to you?
I think I probably I'm doing my full review right now with you, but I will do it. So I think it's a quite of course we didn't expect this kind of run-up, but we must keep in mind that there's a big move happening from China to India, and this is a very, very critical segment from a security perspective, and hence the indigenization of happening very fast. These guys are market leaders. Of course, it has got stretched, valuations are stretched. At this point in time, I will not buy, but structurally it can continue to do well. But of course, at listing, it was far more favorable than what it is today. But sometimes you just ride out because right now there's a scarcity of stock in this. There are more buyers than sellers, and that defines it. So you ride out as long as you think it's fine. But some point I will consider what needs to be done on this.
IIFL was the broker, Aditya Infotech, and there was, I don't know, it's one of those very, very rare cases, right? Listing happens in a market which is primed for listings, and after listing it kind of goes up the way it did. But it has. Two other names, very quickly, Vikas, if you can run us through it, since you said you're doing a review with us, if you're so kind. One is Krizag, and the other is
I think I think I accommodated I thought this was more market conversation than stocks.
Okay. We've done 6, 7, so okay, fine. Next time, the rest later. Just a quick word on the market, Vikas. Are we to expect, is this the move you're waiting for or not really? I'm talking about the last 8 days, 700-point move on the Nifty. Or do you think, I mean, this is just a bit of a tactical move and we've got to still wait?
I think we've not been negative in the market at all. Throughout the last 3-4 months of turbulence, we always believe there's a passing phase; it will go away. And I do believe that what RBI governor is doing and what government is doing in terms of boosting domestic economy is far more important than Trump is doing. And having said that, I feel that is also now seems to be getting in the right direction. So I think everything of Indian economy is in reasonably good shape, moving the right direction. We are not as negative as most of the markets are around the corporate earnings cycle. We think they are not bad; they are in reasonably good shape. And second half of this financial year, it is likely to pick up and do better. So hence, I don't see kind of very high probability of markets having deep cut, and hence we were fully invested. And I think that we are in a good shape. Directionally, I'm quite optimistic on the markets. I think markets will keep hitting new highs soon.
Okay. Vikas, thank you very much. You've been a sport, and thank you for joining us and running us and talking us through a bunch of your holdings and, of course, the view on the market as well. Vikas Khemani there with perspective. I think there was a flash with regard